So yeah, Making Tax Digital is the terrifically exciting world of quarterly updates for landlords. You've probably heard me say in the past, the current introductory times for this for individuals, not companies, individuals, where their gross rent is over £50,000, so not profit, gross rent. If it's over £50,000 from April 26, which isn't that long away, it's only a year and a bit away, you've got to do a quarterly update, and you need digital records to do that. Now there is a version of this where you can use a spreadsheet with some bridging software. The easiest way, as I've illustrated in the past and hopefully shown you, is just to have some proper software that tracks your rents properly, gives you a lot of information that's really useful to have, and lets you submit quarterly updates nice and easily. In November, there was a bolt-on new information from Rachel Reeves. Bless her, she's making it hard for herself at the moment. It's good to see that I'm not the only one who can't do that. So yeah, Rachel Reeves said in November that by the end of this Parliament, the threshold for MTD will be down to £20,000, which I reckon is 2 Tyneside flats by the time you put some inflation in. So most people will have to do quarterly updates as individuals. New update on this, there's been what HMRC called easements. Now these easements are kind of a realisation that there are some issues with the system that they haven't quite ironed out. And one of the easements, Cocoa Melon's quite good. No, Peppa Pig, go on, I'll be Daddy Pig. That was me, Daddy Pig, that's all you're getting. That's a different night, if you want. There we go, right.
It only lasts 2 seconds, but I'll just keep putting it on.
I wonder if it's... What did I miss there? Was that Grandad Pig shouting out from the audience, was it? Yeah, we'll go, it's working. Right, so Making Tax Digital, where was I? Rachel Reeves said by the end of the Parliament, £20,000, which is basically going to be not every landlord, but almost every landlord. The easements that they've announced are quite interesting and to some degree make it all a bit of a nonsense. What they've said is, you can do, if your turnover is less than £90,000, this applies to sole traders and landlords. So I was chatting to someone in the audience about whether you're a sole trader. I can't see him now, I can see him now. Yeah, so if you're a sparky or a window cleaner or whatever you are, or a mortgage broker, if your income, your gross income is less than 90, or if you're a landlord with your gross rents less than 90, you're going to be able to do what they call 3-line submissions. It's a bit of a misleading thing, but you put your income in, your total expenses, which is only 2 lines, but the 3rd line is your profit, which is automatic. So you're going to be able to just put total gross income for the quarter, total expenses for the quarter, and it will know your profit. Nice and simple. The problem for landlords, of course, is your mortgage payments aren't an expense. You get a tax credit, so it works differently. So they can't let you just lump that in. So what they've said is, well, if you've got mortgage interest and you can't therefore take advantage of just putting all your expenses in one box, you can just let us know about your expenses annually. Give us your gross rents quarterly, and then just leave the rest till the end of the year, which just sounds like a tax return to me, but with the added nuisance of these 4 quarterly updates for almost no reason. The other thing that we have as well, of course, is if you've got a repayment mortgage, you might be paying 400 quid to, TMW, but only £100 of that would be interest, 300 might be capital, depending on where you are in the life cycle of the mortgage. So again, that's another complication which they just can't get their head around that. They've just went, it's just not made for that kind of, so just give it all at the end as well. So where are we? Does that mean that you don't need to bother with MTD? Well, I would argue that between now and 2029, which is the current planned end of Parliament, it might happen earlier, but certainly online to finish earlier, I think, at this rate. But I would still say that it makes sense if you're going to have some kind of software mechanism to report your rents, you may as well just bottom the rest out and do it all while you're on. Yeah? Are you chatting there? Are you sick of her as well?
She's whispering things to us.
Hold on. I won't get involved, I'm sorry. Whisper away. Right, so I personally think if you're going to have the software anyway, you may as well do it. I can't see the point in having software but only partially doing it. But we'll see what happens. I'm going to try and cover two things that have been reported into me this week from the mortgage team over at AMS. I've got to be honest with you, I'm not really sure I understand the logic or the mechanics of this, but I get what they're trying to do. They're both variations of the following. So I'll just give you one example and I can kind of cover off both examples. So landlords as individuals are taxed quite punitively. You'll be sick of hearing me say this. If you haven't been before, there's plenty of videos on the hub, which we'll share later, where you can see me saying this. The punitive rates make landlords do some fairly desperate things because they're very punitive sometimes. One of those things that seems to just keep coming around and people have is they set up a company, and what they do is they just pay all of the rent into the company, and that's it. That's the extent of their planning. The problem is they've got mortgages on the houses that say you must get rent, otherwise you're in breach of the mortgage terms. What's the current ratios? 140% or?
Well, basically, it's rent to rent, but instead of renting their mortgage, instead of renting the property to a normal tenant, they rent it to their own limited company.
So what they do is, let's say they're paying 200 quid interest only on paid 200 quid interest, they'll say, well, the company can have that property for 200 quid, it'll get 500 quid, the company makes 300 quid, seems like a great idea, but you're breaching the mortgage terms because there's got to be at least that markup on the interest, otherwise you're in breach of the mortgage terms. You also can't do that because the company has no legal basis for receiving the rent. So HMRC would look at that and say, that 500 quid in the company, yes, it's paid you some of the rent to cover your mortgage, but actually that's all your rent. So we want all the tax off you as an individual. And you would say, but I've already paid tax through my company. They'll say, we don't care about that. On you're out of date, you can't get it back. So they're literally going through these now. It comes up because the tax rates are so punitive. If you get it wrong, it drives people to do these desperate things. Whether you should or shouldn't put your properties into a company is a valid question. What you can't do is just pretend you have, but not tell anybody at all, and then still expect Laura and Paul and the team to get you a mortgage somehow, even though you've got no rent. So yeah, I think I've done that justice by just saying, just don't, yeah. That's me.